Good morning, traders. Welcome to Thursday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news and see what's going on today so that we're not taken by surprise. And looking at the news calendar, there are a few things coming out today. At 8:30, we have the GDP for quarter four. Forecast is 4%. At 8:30, along with that, initial jobless claims. Forecast is 875,000. At 10 o'clock, we have the new home sales for December. That's a forecast of 865,000. And that's really about it. The rest of the news sort of drops off and quiets down. So there's not a whole lot else past that, but we do have news at 8:30 and 10 o'clock, and it's nice to have news spread out like that. It allows the market a bit of time to keep the volatility going. It's not so early in, early out. So with that, with the news out of the way, let's jump in for today. Today being the, January 28th of 2021. First up on the list is going to be the NASDAQ, and with the NASDAQ's overall movement, we've got some pretty good pullback, I would say. I think that's fair to say that we pulled back pretty well, all the way down to a deep L4, and also the bottom of the rising channel. So there's some obvious support coming in here on the NASDAQ, but the big thing that stands out here is how it sort of cut through the lows, big bounce off the low, but now we've really got to see, are they going to hold? We maybe have a higher low. Maybe this ends up breaking this falling resistance. That's where problems could come in. Obviously, the probability lies with the sellers. You don't just dive down like this without gaining high probability. That said, though, we have to stay realistic, because if the sellers start failing, this is a long-term bull market, and this is a very nice dip to be buying into from the bigger picture. So buyers will be looking to accumulate this back around this gigantic psychological level at 13,000 and lower. And if they're able to bounce it back up, we should start seeing this falling resistance get out of the way, and then we'll be off to the races back up again. Next up, over on the S&P with another nice dip, and realistically, we've got maybe a bit more to go on the S&P. It's showing the same situation as the NASDAQ, where we've got the higher low, we've got everything kind of lining up, saying that maybe there's a potential shorter-term bottom in, but when we compare this to something like the NASDAQ had a really, really nice bounce off support. The S&P is kind of dodging it. We haven't really hit the base of support yet. That's back below 3,700. There's a lot of things that are sort of missing in this equation that still need to happen for the overall down move. And if buyers are waiting to jump back in, that means that if the sellers do start pushing, there's not going to be a whole lot really in the way to stop them. Next up on the list, we've got gold, and the overall movement on gold. I mean, it's calmed down for the most part. It's kind of sideways. It's not really getting a whole lot accomplished. The sellers have obviously failed multiple times on the lows, very aggressively too. It's not just small failures. And it seems to be relatively repetitious around the same area. We get that big flush down to the 1830s, 1840s, and then it reverses back up again. Now, notably, every time that it's done this so far, we've had a nice bounce, but it's been lower highs the whole way. That may mean that the buyers that are coming in on the lows are getting weaker, right? They're not able to finish the job, and well, therefore, if they aren't able to finish the job, we'll probably see this roll back over. If they are able to finish the job, though, then we'll start seeing this falling resistance get out of the way, and then the market goes screaming higher, and we're back up to those 1900s again. So there's a big area of interest that's going on here with gold in terms of, is this an accumulation zone that buyers are just allowing to pull back a little bit further so they can get more and then go higher? Or is this just a seller who's taking profit, bouncing the market a little bit, but there's no actual strength behind it, and then it breaks down and goes crazy lower? Then moving over to crude oil, we have another relatively sideways market. There's not really a whole lot going on in crude oil while it continues to chop around this 53 to 54 area. Well, let's say 51 to 54 area. It just keeps jumping around. Yesterday's inventories really didn't do a whole lot. I mean, it obviously shoved the market higher, but once it hit the highs, then it faded right back down as if the inventories never even happened. So we're obviously still in a range sentiment, otherwise it would have broken out of this. The big question still remains, is this just a gigantic profit-taking area before another big leg up? Or is this the reversal point that we've been talking about for a really, really long time? We still don't have any sentiment yet. Buyers are looking to buy low. Sellers are looking to sell high. Sellers do have some resistance coming back into the 53s to try to push the market back lower. Bulls, realistically, they're going to have to wait for a dip underneath 52. Support doesn't start showing up until the 5180s. And even then, it may want to try to challenge those lows just because the most recent move, aside from that, was through the top. And a lot of times, if they just broke the top and start cycling lower, they're going to try to break the bottom. We'll see, but it's still a range. So buy low, sell high, and stay the heck out of the middle. Over on the euro, we have just a wild expanding megaphone to the bottom, kind of a downward angled expanding megaphone. It tried to cycle off the lows with a very sharp V bottom, and after that V bottom was put in down here, well, it's just been higher low, higher low, higher low. And notably, from the top at least, this has been an L1 and kind of an L2 that sellers tried coming in on and just got smoked. So knowing that sellers are stuck, they have not had success on this move, and seeing it pull back to that zone of interest where they would have initially gotten short, this is their chance to get out, right? This is their chance to get out of break even, lighten the load, reduce the risk. And that appears to be exactly what's happening here, given the rotation back up. So as long as we're seeing them lighten the load, we're cycling off the bottom of the megaphone, expecting to see a second leg back up to the top. That's what fits right now, especially with this V bottom. Now, if the bulls fail and we start seeing this cycle back lower, that would be a really big problem for the buyers. The buyers do not want to see that right now. And keep in mind, the buyers are on the low probability side. They're on the low probability but high reward for the risk. So it's not the best setup in the world for the longs, but the ROI is really nice. And for the shorts, the ROI is really bad, but the probability is good. So it's that trade-off. Buyers are trying to get this to rotate back up to the top of the megaphone. And yeah, from a swing perspective, it's not looking too bad, but they've got to keep this going. Then swinging over to the cryptocurrency side of things, we have Bitcoin up first with a very nice flush through 30,000 and a pop right back up again. No big surprise there, right? 30,000 is just a little bit of a psychological level. We've got a lot of bulls bouncing off of that area. It's been 3 higher lows all the way up. And typically when you start seeing that sort of formation where you've got 3 failures from the sellers and they're still breaking higher, usually the probability starts tilting in the opposite direction. So the bulls have a really good shot here to try to take this higher. It's just a matter of whether or not they're able to break through the top here now, or if one more pullback is going to be necessary. A lot of sellers will have been, kind of suckered into this move, trying to get this to break down, and, well, now they're stuck. So they need a good pullback to get them out, and if they can get that, then that clears away even more for the bulls. But the buying pressure looks really nice, and they're trying to get another secondary bounce off 30,000, likely to try to rally back up towards at least 33, preferably back up towards the highs of the bigger range at around 36. And then lastly, we have Ethereum, which is showing some pretty good bullish momentum here as well. The big thing to keep in mind when it comes to Ethereum is we're bouncing not so much off a big psychological level like Bitcoin with 30,000, but we are seeing that nice little pullback area to the 12 to 1250s. This 12 to 1250 area is a no mess around zone. Every time it comes back to this area, it creates a lot of back and forth price action, and it's something to definitely keep our eyes on. And right now, the bulls are cycling back higher, breaking out of falling resistance and structure. It'd be a lot nicer if we were coming off of a major level of support like an L4, but we do have rising channel support. We've got the wedge, which is currently attempting to break out. You can kind of see how this lines up, where if we can get a nice little breakout pullback, all of a sudden we start stacking these things together that line up really, really nicely. So it's looking good for Ethereum to try to crank higher, but we've got to get back above this high they made at the mid 1320s, because realistically, this may be an exhaustive blow off, and all of these highs inside here may end up being resistance, and we see this get shoved down. So the buyers need to show up and break above this, and if they can't, it might be look out below for a little while and possibly even buy a little bit more on a dip. Alrighty, well that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, let the winners run. Until the next one, I hope you have a fantastic trading day, and we will see you all then. Thanks.